I don't know that I'm the first person to make that comparison because it's very easy, right? You're addicted to something. So I would forgive you because I don't think I invented that one. But there are a
Okay.
few analogies I did come up with myself that
So
Gunlock has a habit of passing off as his own.
yeah, I know. I was listening to your podcast on that one in the gym the other day. I was getting a kick out of that. So everything that you're saying right now, if I'm the listener or the viewer, I'm thinking, man, this has to lead to long-term inflation, like 1970s. So, but the pushback there is, why is the dollar still at, call it 90, 91, and then why are, I know rates at the long end are going up, but if what you're talking about is going to come to fruition, I mean, rates should be at the long end, on a 30-year should be 10%. So why are they down at 2% and why is the dollar still at 90?
Well, because the Federal Reserve is in the market buying treasuries. I think the Federal Reserve now has, what is it, 5 trillion of treasuries on its balance sheet. And so the question is, where would interest rates be on treasuries if the Fed had not bought them all? Clearly, if the Fed is this huge buyer, then it's supporting the price. If you take that buyer away, the price of treasuries would have gone down, meaning the yields would have gone up. So you do have the Fed in there. Then you also have, I think, a lot of speculative money that is in the treasury bond market. Not, basically because they see real long-term value in holding to maturity and clipping coupons, but because they're able to lever up and borrow money and at a cheaper rate and then buy the treasuries. You get tremendous margin on treasuries. I mean, you get massive leverage if you post treasuries as collateral. So you can create this trade with a lot of leverage. And so I think there's speculative demand in the market that is only there temporarily. I mean, at some point, the market's going to collapse. The same thing's going to happen with the dollar. You can say, well, why is the dollar index still at 90? Why hasn't it crashed? Well, you can keep saying that right up until the day that it does crash. But the momentum is building for the dollar to crash. I mean, in a way, and again, I don't think I made this one up either, but I've been using it for a long time. But it reminds me of the Wile E. Coyote Roadrunner cartoons, where Wile E. Coyote runs off the edge of a cliff, and he's just suspends in midair. And everything is fine until he looks down and notices where he's standing, and as soon as he realizes he's not on any ground, then he falls right into a puff of smoke.
Yeah.
So I think you've got a lot of people around the world that are still holding on to the dollar, and they really haven't looked down yet. But when they do, they're going to sell. The dollar's going to crash. I mean, there's no place for it to go but down.
Yeah. Whenever I think about the Fed adding additional demand to the long end of the curve right now, therefore, bringing prices up, bringing yields down or artificially low, I go back and I look at a chart of QE1, QE2, and 3. And when they did that, the rates on the 10-year initially actually went up instead of down. So that's why just me personally, it's tough to reconcile how much the Fed is a part of the interest rate equation at the long end of the curve, because you would have thought the rates would have plummeted during QE 1, 2, and 3, and they go the opposite direction. I guess because the market at that time expected that there would be inflation, and then when there wasn't, the rates went back down. But do you have any insight into that?
Yeah, I think that's true. And you initially start to see the government, the Fed, printing money to buy short-term treasuries. You know that that's inflationary.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
And so if they're not buying the longer term debt, then the yields are going to rise on that debt. People aren't going to want to hold it unless they can get a higher interest rate to compensate them for that increased risk. But now you do have the Federal Reserve buying on the long end of the curve. In fact, remember Operation Twist. That was exactly what that was. That was about, we need to bring down longer term rates, so the Fed needs to start selling some of the short term and then using the money to buy long term. But right now you still have a lot of misplaced confidence in the Fed, in the U.S. economy, and therefore in the dollar. But I think as more and more people are able to see the situation for what it is, understand that the Fed is all a bark and no bite when it comes to inflation fighting. In fact, they can't fight inflation. Inflation is the only policy tool, politically viable tool that they have. So they are deliberately creating inflation. They are deliberately debasing the value of the dollar. And when our creditors finally decide that they don't want to hold them anymore, then that's the end of it, right? Because then the dollar is going to fall precipitously and rates are going to move up. And it's going to be impossible for the Fed to stop it. It's like the Sorcerer's Apprentice, on Disney, where, all the holes keep, popping up and they got to try to get the water. But because eventually, as inflation starts to pick up, right, nobody is going to want to loan U.S. dollars at low interest rates. And so yields are going to be soaring on all dollar-denominated debt. Now, the Fed can't buy it all. What are they going to buy? All the munis? They're going to buy all the corporates? They're going to buy all the bonds? Because rates are going to start to rise. Because once you believe that inflation is going to be 5%, 10% a year, and it's not going to stop, are you going to loan somebody money at 2% or 3%? Why would you do that?
Yeah. How much of inflation or sustained inflation, because they're talking about this being transitory, but how much of sustained inflation do you believe is psychological?
Well, I don't think any of it is really psychological. I mean, the inflation is the expansion of the money supply.
Right.
I mean, that's going off the charts.
Yeah, right.
And I don't even think people really appreciate the degree to which prices are going to be rising. When they do, right, that you're going to see it more. I mean, they are going to rush to the stores and buy everything that's on the shelves. It's going to happen. But I think we've had so many years where inflation has been there. I mean, prices have been going up on an annual basis. I mean, they don't come down, but they've gone up slowly. And so, kind of like, boiling a frog in oil, right? No one has really noticed the temperature coming up. But all of a sudden, you turn up the heat, big time. People are going to notice, and they're going to change their behavior. Yeah. And that's going to pick up the velocity of the money, right, on top of the increase in the supply of money. But, I don't see any way that the Fed is going to turn off the presses. I mean, I just don't see it politically how it's going to happen. I mean, even when the Republicans were in charge, they couldn't cut government spending. They kept increasing it. I mean, no one cares about the deficits. They all think that government is free if we pay for it with a printing press. And I don't even know that they're going to make the connection between all the money they're printing and prices going up. They'll start pointing fingers at other people. They'll start blaming Russia or China or speculators or OPEC or whatever. They're going to come up with all kind of scapegoats for why prices are rising, but they're never going to accept responsibility.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.